everyone on this Monday, the 4th of May. May the 4th be with you. 2020. Haven't done one of these for a while, just haven't been posting. Well, yeah, just had a couple of weeks off, just laying low. However, today I just want to do something a bit different. Start here with crypto, XRP chart, bit of a fan of XRP. Based on the underlying fundamentals. Do your research, guys. There's a lot of coins, and compared to the total amount of coins, there are a lot of, let's say, questionable ones. Scams, potentially pump and dump coins, low market caps. Guys with, relatively larger amounts can make it move up and then just take profit, and they crash back down. So I'm more of a fan of the top 10. A couple of others outside have good fundamentals, but yeah, at the end of the day, we're here to make money, guys. Don't attach our feelings to any one project. So, XRP, pretty bearish at the moment. You can see it rejected this sort of support level. Sit on a daily time frame here around 15 cents, 14.7. Fair few rejections. That's the same level. So that's how we know that it's good support, because it's done it more than once, twice, 3, 4, 5, a bit lower, but that sort of region, 14, 15 cents. Weekly chart, still very bearish. Look, lower highs, lower lows. Back to the daily chart. For me, until it breaks out of this trend, breaks above this trend line, then retests it, but until it breaks out, I'm not really bullish on XRP. I see it currently as potentially coming back down to this region in here to give us a double bottom or higher low, or it could give us a lot more of a higher low if it rejected this 50 EMA, because you can see it did break above it, then straight back below. Same thing again, stalled on it, then popped clearly above. So bullish divergence. Sold at this top here. Look for a price to come back in this level to rebuy into there, then grow my holdings. I don't trade it, I just spot buy. But to accumulate, I sell some of my holdings at higher levels and then buy back lower. BTC, similar sort of thing. You can see very clear right there. Look. A few nice rejections. It's broke up into that structure, the 20,000 high. Pulled back, tested that trend line again. Back last year, we had this bullish movement. It's just come back. Had this sell-off here earlier last month, back down into the 4,000s, back or even to 3,000 high threes. Now we've broken above. However, look, high hasn't made a high yet. It's got to break above that, and that's why I say similar to XRP, break of that trend line, then I'm bullish. Currently, still bearish. Same sort of thing, broke above this 50. Let's see if it rejects the 50 or it dip lower, make a double bottom or higher low from there. They're all very similar. Look, same thing, trend line there. Ethereum, Litecoin, same thing. So it looks like they're all holding a bearish trend line. So same thing across the board until they break above that. I'm not bullish, I'm still bearish. So it's the same thing. BAT, similar thing. I'm not going to draw them because I can see it, and I just like to keep my charts clean, especially because I don't trade. I don't really look at these much, so I just want to see clean price action. If we look at the XRP longs, you can see that are in this sort of range, and they're now retesting the lows of it. If the long, so this is the long orders, all the longs for XRP. The next sort of support would be down around here. Could we dip down into that, meaning less longs, so less buyers for XRP, so buying pressure isn't at peak demand as it was back here, 2019, these peaks, and that correlates with XRP, because during those times, more buyers equals more bullish price action. And if we look at the shorts, we had this increase, back similar to that drop in Bitcoin, all the cryptos dropped. So seller volume and orders you would expect to make the most of the downside would be increasing their orders. See this sort of double top, but not really, and it's broken lower. So this could also potentially come back to support too. So if short orders and long orders are both decreasing, therefore would the volume therefore be decreasing too? So moving on from that, we'll look now at Forex. Lot of pairs on watch. Okay, red, pretty much ready to go. Got alert set, waiting for them to pull back. Give me clear momentum, nice break, nice candlestick formation. Yellow, further development, meaning they're still holding a trend line or some form of support resistance. Need more development, or need much more of a pullback. So I'm going to be quick here. Aussie Swiss for our chart. Clear break below this ascending trend line. Sort of a low there, bit of support, bit of resistance, broken lower clearly. So looking for it to retest, looking for a short around 5%, potentially more. So I draw the Fibonacci extension on my 1 hour chart as well, just to see the intraday Elliott wave. So you can see here wave 1, wave 2 pullback, that's what we're aiming for now. And a wave 3 typically goes as far as 1.272 to 1.618. Sometimes it can go a bit further, but those are the most common sort of fib extension areas. So I'm more of a day trader. I like to take profit, and I like my trades over a couple of days. It's taken me a while to figure that out. As you grow and your account grows larger, of course, at any time you can review your situation and tailor it to better suit basically your situation. So that's Aussie Swiss. Aussie Yen, same thing. Break below this 4 hour trend line. Clear. Look for this retest. Also wave 3, targeting that around 3, almost 4%. Potentially lower because on a lot of these there's great higher time frame confluence. If we have a quick look at Aussie Yen, for example, see this breakdown. Last 5 months, 4 months there, clear. That's when the equity drop happened, and you'd expect the Aussie to weaken against the yen, as the yen is a more of a safe haven currency, and the Aussie not so, so people are selling their Australian dollars. Sorry about that. It's not load. Let's have a quick look at what that is. Swiss yen. So this is what happens when an alert goes off. So you can see it's pulled back now to the 1 hour. However, you can see this 4-hour 50 is lower. So to take any sort of trade on that, it needs to drop deeper for me. And I took a trade on this last week. It was a beautiful, took an hour for 2.7%. 1 hour. Like, look at that bullish momentum. Just bang. Look. Entered at 11:55 p.m. Went to sleep after, and look, 12:55 a.m. It's already hit profit target. That's why trading is like nothing else. And I still currently work, and that amount that I got paid there is more than 2 shifts basically. With trading, less is more. Be more particular of your entries. Take maybe 2, maybe 3, depending on your risk appetite. Just it's not hard, guys. It's nothing's there. Just do something else. All right. So where do we get to? We were at Aussie yen. Breakdown. Waiting for a retest. Almost 4%. Aussie Kiwi took a trade on this. Many a exit as it was popping up through the 5-minute here. See this trend line at later. Rejected it. Came back down. Clear high low. Small head and shoulders at the end of a bearish trend. Popped to the upside and it came straight back down. But like to take profit, took before the weekend about 1.8% on that. Aussie dollar, same thing, breaking the 4-hour. Look for a wave through on the 1-hour chart. Back around this fib extension, 2.5%. Also room on that to target further. Euro Aussie, same thing, clear break. Look for a retest. Euro CAD, massive bullish upside. I was watching this for an ABO, but it never really developed. And look at that. That's crazy. Like, if you get a good ABO on that, that's probably almost 10%. Euro pound waiting for a pullback. This is offering great reward to risk ratio, 16%. Back to around the highs, targeting that wave 5 on a daily chart. Euro yen. Don't really like this now. Took a trade on that last week. It was actually a very quick loss. Hindsight, the stop could have been a tad lower. Under this support level would have been best. But look at that, same thing. Read it perfectly. Just a tad too soon. Well, not really. Stopped a bit too tight. But, because what happens sometimes is if you don't take that first 5-minute break, it may never give you another one. That's why you got to back yourself, back your strategies. But look at that, beautiful pop. Hour. Took an hour as well. Euro Kiwi. Waiting for pullback. Same across the board, guys. Next legs to the downside in equities look like they have potential. Prices starting to stall after this pretty bullish month of April, one of the biggest months ever, apparently. So a lot of people may be starting to get a bit greedy and bullish now and think, yep, it's all over. That's all we're going to have. The drop's finished. It's the best time when the shorts happen. So Volatility is still relatively high. And let's face it, unemployment numbers ridiculously low. Ridiculously low. I mean high, sorry. So it's so artificial, the market's up because the Fed has been injecting trillions of dollars, so it's fake. You've got to let it run its natural course, I believe, and then just start again. Stop bailing out companies. So this is Kiwi Swiss. You can see same thing. Drop, waiting for retest. Kiwi Yen's another beautiful trade. This is one of my favourites. Great high time frame as well. Potential long term 10%. It's back down around these lows. Draw the extension. It'll be around probably closer to 5% if we do it now. So look, to draw Fibonacci extensions, you measure from the top of wave 1 to the bottom of wave 1 to the potential pullback region, which lines up with that 50 EMA, 0.382 fib. So targeting 1.1618 extension, almost 6%, 2, 7, lows was 9, almost 10. I really hate taking a move like this and getting to around this area and then it pulls back and you go from having 4% to having like 2, 1. That's why I'm more of a day trader, because in my opinion, and from the way I like to trade, quite often you'll see price retest, get your entry. You're holding it for a week, couple of weeks, maybe even longer, depending how long it takes to play out. And then it'll get to these regions and then pull all the way back through that 1 hour, 50, and almost 4 hour. And if you're trailing the 4 hour because you're a longer term, you're applying longer term management, you can quite often lose a large amount of percentage. And sometimes you take profit here, you wait for that pullback, and you'll get another entry. Using maybe an ACB, maybe there's some sort of bearish pattern forming on a 1 hour chart, even though it's above the 1 hour 50, falling people, giving it, maybe they're thinking it's bullish now because it broke it, but then you look at the 4 hour, it's actually coming back to retest and it's starting to decelerate and forming in like a squeeze on the 1 hour chart. So in the 1 hour chart, at the end of that pattern, lining up with the 4 hour 50 and a rejection, and then look for another entry. And you've already taken your profit, and that's locked in, right? Locked in. No one can take it away from you. No fundamental news, no Donald Trump tweeting anything, nothing like that. So I like to take profit. So dollar CAD, same thing, but waiting for this retest. Dollar Swiss. If I was to long dollar, I wouldn't short this. Dollar Swiss, both safe haven currencies, so we could see a potential back down to near this bottom of the range and back up, back down. You don't know. When you have this many pairs on watch, you can be very, very picky and choose the best setups. So let's move on now to equities. Have a quick look here. Dow Jones, you can see this drop, pullback. Friday last week we had this breakdown back below the daily 50. Be interesting to see what happens this week. On the monthly time frame, you can see this clear head and shoulder pattern, left shoulder, head. Now it's came back this last month. Is this the right shoulder? Do we come around here this month, stall and then just go bang? And this is the strongest form of head and shoulders because the right shoulder is actually a clear lower low, previous low. High, Is this now the lower high? We don't know. Going to a weekly time frame to better see that clearer. Look, left shoulder, head, right shoulder. Clear rejection, bearish candlestick formation, support, support, open close prices closing above that. More of a zone, but that's relevant to this. And here too. Do we see a bit more of a push? Bring this 50 down before then rejecting it. Take another couple of weeks, we'll see. Or do we just continue this bearish price action? Fibonacci extension as low as the previous low back in 09 March, which was the last crash, around 6,500. We'll see. Like really, in this current situation, the Fed hadn't been buying all this, it should be closer around these lows already. You measure the top to the bottom, if it was to play out that much and drop that high, it's almost 80% possible. The environment we live in now, there's so much debt, like it's next level. I don't know, it's going to come crashing down eventually. They're prolonging the agony, in my opinion. Just let it happen. But yeah, I guess prolong the agony and have constant agony for a lot longer than a hard, fast burst of agony, and then recover quicker or sooner rather. Don't know. Easy for me to say, I guess, when I'm not in charge of anything, of the tough decisions. So DXY is a dollar index. You can see it's holding some support, similar sort of thing, sort of a zone here. Clear zone. Get rid of that actually, because you can see that. So look, fell down back in Feb and gained a lot of strength, as you'd expect, because people are selling their equities. And what are they selling into? They're selling into US dollars. So demand for dollars, even though they're printing it, because there's still a shortage, because it is the world global reserve. So all countries use it to trade, pay debts, etc. Great demand, more buyers. The value of the dollar goes up. Now it's come back. It's sort of in this range again. So if we see this pop to the upside, it says to me it's also further confirmation that equities will drop. Retest of these highs, maybe higher, let's see. You can see back in 98, 2000 as demand fell down massively. Where was the last recession here? 708, look. Demand for dollars eased off a bit. There would have been a pullback or correction in equities during that time, which there was. And back up again, same thing. So, like, this is why I love charts, guys. So clear, so obvious. Correlate and build a picture. US oil, we had this crash, unreal. My best position this year was oil, short. Wasn't in it exactly when this happened. Actually, yes, I was. I took it short on it the week earlier. Stock market. Here we go. Same thing. Look, same as the Dow Jones. Left shoulder, head. Left shoulder, head, right shoulder. Beautiful, beautiful high stick, high test rejecting. Fibonacci, look at that, 0.618 Fibonacci, beautiful, the golden ratio. And how convenient is that, eh? This is what I mean, guys. It's absolutely perfection. Fibonacci charts using Fibonacci's like, look at that. 50 EMA, perfect. Bit through the 20, close back below, rejecting it. Let's see, I took a short on this on Friday. I'll bring it up here. Took it on this break at market open. So we've broken. I'm looking to close this 1 hour 50. I took it pretty early. Well, pretty much as soon as I saw market open because, well, look at the gap. Close there. Open there. Decent gap. Will it come to, I don't know if it will come back to fill that because that's only a 5-minute chart, but entered it here, targeting around 10% back to the previous support. Well, back to around the highs back in before the last recession and crash. So anyway, guys, that's it. Looking for further, basically shorts on pairs against, on any pairs that are against the Japanese yen, Swiss franc, US dollar. What are Kiwi and Aussie pairs? Looking for further downsides, decent 5 to 10% risk to reward. 16%. Crypto, expecting further downside. That also correlates to equities having another sell-off because people sell off, they panic, they sell their assets and basically want to get into cash, which if you have enough cash buffers and think like that all the time, well, you're fine anyway. But, you know, when everyone is like that. So expecting equities further drops, crypto further drops, pairs against the safe haven currencies further drops. Some great opportunities, guys. Like this is the time. If you can get some great moves, you can make some absolutely astronomical returns in very short spaces of time. You know, a month, 20% plus. For March, I had my best month ever, almost 40% return. So, you know, I'm being patient. I'm waiting for everything to line up before hitting the trigger. So that's it, guys. Until next time, hope you enjoyed this. Take care and see you next time.